When you think of oil money, what comes to mind? Maybe it's the towering skyscrapers of Dubai, or perhaps it's a more understated, quiet form of wealth. Two countries, the United Arab Emirates and Norway, perfectly capture this contrast. Both discovered vast oil reserves around the same time, both became incredibly wealthy, and both faced the same critical question: what do you do when your fortune is tied to a resource that will one day run out? Their answers couldn't be more different, and those choices are now shaping their futures. Let's start with Norway. From day one, Norway treated its oil discovery not as a permanent identity, but as a temporary gift. Instead of spending the money as it came in, they decided to save it. They created the Government Pension Fund Global, which is now the world's largest sovereign wealth fund. The idea was simple but revolutionary. Do UNT use the oil money to fund flashy projects or immediate consumption? Instead, invest it globally across stocks, bonds, and real estate. Today, that fund is worth well over $1 trillion. The returns it generates are used to support Norway's public services, like healthcare and education, without ever touching the original capital. It's like a national trust fund designed to last forever. Essentially, Norway's wealth is built to outlive its oil. The strategy is all about long-term stability and insulating the country from the boom and bust cycles of the oil market. Now, let's fly over to the UAE. They took the opposite approach. Instead of saving quietly, the UAE invested loudly and aggressively. They used their oil revenue to transform the country at breathtaking speed. They built world-class infrastructure, entire cities that rose from the desert, one of the world's biggest airlines, and massive global business hubs. Think of Dubai and Abu Dhabi. They are symbols of pure ambition. The UAE's bet was that they could build a new economy based on tourism, finance, logistics, and real estate before their oil reserves became less important. This strategy delivered spectacular growth and put the UAE on the global map. But it also came with risks. By tying their economy to global business, they made themselves more vulnerable to international market shifts, real estate cycles, and the flow of foreign investment. When the world is booming, the UAE soars. When global markets get nervous, the UAE feels it immediately. One of the most fascinating differences is in their governance. Norway is a mature democracy with strong, transparent institutions. There's a lot of public oversight, and decisions about the wealth fund are made with long-term stability in mind. This creates a sense of predictability that investors love. The system is designed to be slow, steady, and resistant to political whims. The UAE, on the other hand, has a much more centralized and agile system. Decisions can be made incredibly quickly. A mega project can get approved and built in a fraction of the time it would take in Norway. This speed has been a huge advantage, allowing the UAE to constantly adapt, attract global talent, and stay ahead of the competition. But it also means that the country's direction depends heavily on the vision of its leaders. Then there's the people. Norway's oil wealth supports a relatively small population of its own citizens. The economy is built around high wages, strong social safety nets, and a commitment to equality. The focus is on investing in their own people. The UAE's model is very different. The country relies heavily on a massive expatriate workforce from all over the world. Citizens make up only a small fraction of the total population. This approach has allowed the UAE to scale up its economy with incredible efficiency. But it also creates a dependence on global labor flows. So, when we talk about diversification, both countries have succeeded, just in very different ways. Norway diversified its finances by investing its money abroad. The UAE diversified its economy by building new industries at home. Norway's wealth is compounding quietly in markets all over the world, while the UAE's wealth is visibly circulating through its bustling cities, trade, and tourism. As we look to the future, each country faces its own unique set of challenges. Norway's main concern is an aging population and maintaining productivity in a high-cost economy. For the UAE, the risks are tied to global economic cycles, regional political tensions, and the long-term impacts of climate change on travel and trade. It's important to understand that neither model is inherently better than the other. They simply optimized for different goals. Norway chose stability and predictability. The UAE chose momentum and rapid transformation. What makes this comparison so powerful is that both nations masterfully avoided the resource curse, that common trap where oil wealth leads to corruption and economic stagnation. They just did it with opposite philosophies. Norway built a fortress, insulating itself from volatility by saving and regulating. The UAE built a launch pad, using its oil wealth to blast off into a new economic orbit. One strategy whispers, the other moves fast and breaks things. In a world that is actively transitioning away from fossil fuels, the ultimate question isn't about which country got richer, they both did. The real question is, which model will prove more resilient when oil is no longer the dominant force it once was? Norway is betting that discipline and patience will win in the end. The UAE is betting that speed and adaptation are the keys to survival. The future won't declare a single winner, but it will reveal a fundamental truth for every nation blessed with resources. Oil wealth is easy to get, but it takes true wisdom to make it last. Thanks for watching. If you found this interesting, don't forget to like this video and subscribe to the channel for more deep dives into the forces shaping our world. See you next time.